Now, China stocks rose this morning to end the week higher, boosted by hopes of more stimulus to shield the world's second largest economy from the COVID-19 pandemic. The latest dismal economic readings reinforced hopes that Beijing would roll out more monetary and fiscal measures to bolster its economy. Now, profits at China's industrial firms slumped in the first 2 months of the year to their lowest in at least a decade, with the mining, manufacturing and power sectors all seeing sharp falls as the virus outbreak battered China's economy. Also helping lift sentiment, though, in China, leaders of the G20 major economies pledged yesterday to inject over $5 trillion into the global economy in order to limit job and income losses from the coronavirus and do whatever it takes to overcome the pandemic. Quickly, a look at the markets. Japan going up, though, nearly 4% on that day. The Hang Seng, unfortunately, not seeing some good numbers on that front, while the Shanghai Composite did sit higher, 2,772 points. A quick look at how things are faring out on Wall Street. Well, negativity had reigned supreme for quite some time then, if we go on to Wall Street's markets, and that will tell you then exactly how far things have been in negativity. Of course, the U.S. has set to vote then on that $2.2 trillion stimulus package, with the House of Representatives then looking to get involved on that one. The Dow Jones Industrial Average wrapped up what was its strongest 3 days in 9 decades last night, as record weekly U.S. jobless claims came in below investors' worst fears, and the focus stayed on an unprecedented $2 trillion stimulus awaiting approval by the House of Representatives. Donald Trump agreeing that he would then push that through as quickly as possible. The Dow finishing up 21% from its Monday low, establishing it in a bull market. According to a widely used definition, it was the index's strongest 3-day percentage increase since 1931. The number of Americans filing claims for unemployment, that surged 3.28 million last week as statewide lockdowns brought the U.S. economy to a halt and unleashed a wave of layoffs. Very quickly, let's check in on how the markets are faring, and you can get a hold of those. All negativity across the board, unfortunately. The stimulus efforts not necessarily having the same impact across the board. On the local front, we're also getting a sense of negativity, more than 2% down for the JSE All Share today. Negativity in most markets as well. The industrials getting a large battering there too. Onto the commodity shares. Well, if we move on there, you're getting negativity as well across the board. So it seems to be a broad-based sell-off, unfortunately, today as we await that stimulus effort, which doesn't seem to have curbed the anxiety for market watchers. Onto the commodities board as well then. Only the price of gold perhaps getting a little bit of safe haven trading coming into it as it goes up to 1,621 there. 737 for platinum, with oil then sitting a little higher. Now, onto the currencies picture. Well, the local currency has tried to find some gains, and that's exactly what's happened today, but it does still languish above 17 Rand and 50 cents for a US dollar. It's 21.49 for a pound, and the euro at 19.28. A quick look at those BRICS currencies as well, then a sense of stability still on that front. Let's quickly move on to another story. While South Africa continues to count the cost of the lockdown, Moody's Investor Service is scheduled to release its assessment of the country's ability to repay its debt. Now, having already lowered South Africa's growth prospects, the ratings agency is anticipated to make its announcement later tonight. The unprecedented lockdown of the country due to the spread of the coronavirus may offer a reprieve, though. Today marks day one of the lockdown, which will see key economic sectors grind to a halt. This is expected to have a devastating impact on growth and affect the country's fragile jobs market. Earlier this month, Moody's lowered South Africa's growth forecast for 2020 to 0.4%. That announcement could see the country again dodge a downgrade to junk. Once one of South Africa's biggest clothing retailers, Edcon, now facing a collapse. The entity may be the first to feel the full impact of the spread of the coronavirus. The retailer facing lost revenue of at least 1.2 billion rand that was incurred in just 2 weeks before the lockdown. Now, while the entity is on the brink of collapse, CEO Grant Patterson struck an emotional figure. Patterson has told suppliers that he may not be able to make payments to them after losing 45% of sales. The cut will leave the owners of Edgars and Jet with just enough to pay salaries. The country's 21-day lockdown may cost Edcon at least another 800 million rand as its 1,100 stores across the country are forced to close. The company is considering bankruptcy and will hold talks with government about a possible bailout. And it's officially the first state-owned entity, to have run out of cash. SA Express will be among the first companies to apply to the UIF Temporary Employee Relief Scheme for assistance. This comes as the SOE takes a hit after being grounded under the expedited COVID-19 restrictions. Having not paid salaries in March, SA Express's business rescue practitioners are looking to liquidate the struggling airline. And that's all because it says the SOE has run out of cash and has no reasonable prospects of being rescued. SA Express was placed under involuntary business rescue by the High Court in Johannesburg. That was last month. The rescue came after a successful court application by the airline's former service provider and creditor Ziegler SA. The airline has a debt value of 2.8 billion rand despite successive government bailouts amounting to 1.5 billion rand. SA Express has almost 700 staff. The business rescue practitioner says a liquidator is needed urgently. While the latest economic measures announced by the government are primarily aimed at small businesses, what is the state of South Africa's SME sector as day one of the lockdown kicks in? My colleague Diabo Seto kicks off that discussion after the break. We also have books on point, and while some may fear for the country's food security, agri-economist Wandile Sihlobo tells us why we can still find common ground. South Africa, please stay safe as the lockdown continues. Keep washing those hands and don't lose sight of the call to flatten the curve. From the team and myself, that's where the buck stops.